A lot of manufacturers have raised chip prices due to the ongoing shortage. To what extent do you think the prices hikes are also driven by inflation or consumer price index?
I would say that it has little to do with the CPI. In theory, and chips get faster and cheaper over time. And you can look at that from your smartphones. You could look at from computers. Performance that you would get for $500 2 years ago will be nothing compared to what the kind of performance you can get for $500 or even $400 2 years later. So I think one of the questions is how big has been the leap in prices? I think the most obvious one to look at is graphic card prices, the ones produced by NVIDIA and AMD. And so, for example, the RTX 3080, which is like a high-end graphics card for PC gaming, very popular, was launched at $700, but you can't find it for $700. You can only find it for something above $1,100, $1,200. And so the price has nearly doubled, and that has nothing to do with inflation. The price of milk hasn't doubled, right? So I think it has little to do with inflation. It has more to do with the fact that demand is very, very high, supply is very limited, and that combination has resulted in prices going up. One of the questions does come in is chip maker or is somebody else who's increasing prices? And so in the very start of the pandemic, when the demand for semiconductors was shot up, chip manufacturers actually did not really increase their prices. It were intermediaries in between. So for example, the graphic card example I just gave you, NVIDIA launched it for $700, but people bought those graphic cards and then sold them further for $1,200, $1,300. And the reason that they were able to do that was because the demand was very high. And now a lot of companies are launching new products which are slightly better than what is available today, and they've just increased prices. This has happened in 2021 with, for example, in the case of NVIDIA's RTX 3080 Ti, it's a graphic card which is roughly 10% faster than the $700 version, but it's around $1,200 in price. The semiconductor companies are now catching up and saying, look, with all this increased demand and these high prices, we are the ones who should be capturing the value. So the market dynamics have shifted as a result of that. But it has changed very quickly. In 2020, they weren't making more money because the prices were high. In 2021, they are.
ST Microelectronics launched a new share buyback program along with their latest financial report. Could you explain what such physical plans mean for ST as well as other semiconductor companies?
I think share buybacks are a signal from management teams that they believe that their shares are undervalued. And share buyback programs, if done correctly, can prove to be a powerful indicator for the open market to know that the price of a certain company is lower than it should be. So with STM Electronics and other semiconductor companies doing share buyback, that is them giving a signal that they expect their share prices to go up. Also, share buybacks are useful when you are sitting on a lot of cash. So one of the things that companies do is that instead of investing that cash in other projects, they start returning to investors by buying their shares back. So I think there are these two things, and we do know that the semiconductor industry has been doing quite well because of the very, very high demand for electronic and technological equipment in the world. And so it's no surprise that they're sitting on a lot of cash, and they also think that their share price can go even higher. So I think that's the combination for the reason for doing a share buyback. It's not a bad thing. It's not a good thing. It is a thing, and management does it when they believe that a company is undervalued. They don't have anything else to spend money on. A share buyback generally is not really a strategic move. It is very tactical. When I say that they don't have anything better to invest on, it could just simply mean they have more cash that they can spend on R&D. They don't have any mergers and acquisition targets, and they are trying to generate a return for their shareholders. And the way the company does it is that it says, hey, you're going to buy a few shares at this price, and first come, first serve for a certain amount. It rewards investors for keeping that share price and keeping their shares with them. and also tells the market that the company feels confident enough to buy their shares at a slightly higher price because they expect the company's overall share price to go up down the road. So it's a positive investment for them. So it has functional reasons, but I also think it has a lot of market messaging reasons. And I wouldn't be surprised if more semiconductor companies do that, especially the successful ones, because they've been able to generate a lot of cash since 2020, and the demand is so high for even low-end semiconductors that business is booming, and that's a sign of that.